How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to tonight's session entitled The NATO-Russo War, Market Trading Opportunities. And there are plenty of opportunities. It's a miserable subject, but we're traders, and our job is to take money out of the markets when we can. We can't always do that, and when we can, we do. Hi, Muhammad. Good to see you. I can see Muhammad hears my voice, sees the opening screen. That's good enough for me. I'm going to just begin forthwith. Let me introduce myself before I tell you a little bit about tonight's session. I'm Seth Julian. I'm 65 years old. I've been trading in the capital markets for 52 years. I started off obviously as a young man trading stocks. My first stock was an asset called whose symbol was XRX. If anybody remembers that. Anybody? I hope you guys are going to be a little more active than you have been and were last week. Anyway, I ask you, the only rule I have in these sessions is that I ask you to be interactive. Feel free. Don't be intimidated or inhibited in any way. We don't consider any question dumb. We respond respectfully to all questions. They're a sign of interest. They're a sign of commitment. Anyway, nobody seems to remember what XRX was. XRX is, by the way, not also was, is Xerox. Xerox, when I was a young man, the 1960s, was the alphabet of its day. It was one of the leading tech corporations in the world, and it was a great stock to own. And I've been trading ever since. I trade commodities, stocks, stock indices, bonds. I own bonds. I still own some stocks, not too many anymore at my age. And I trade the foreign exchange markets regularly. Been a lot of good opportunities in foreign exchange. Anyway, I've been educated at schools where I learned political economy. I have an advanced degree in international trade and economics, and an advanced degree in management and finance. I started my career on Wall Street in the early 1980s at an outfit called Bankers Trust Company. Interesting outfit, though. You should do a little research into them. They were quite the cutting edge operation in its day. And I've been, this is my third international trading house that I've been associated with since then. As you can see, I'm the chief global strategist here at Alvexo, and I'm a registered securities dealer out of CISEC in Cyprus, and I have the ability to deal securities and give client advice all throughout Europe. So if you have any questions about that or me, feel free at any time. But if not, let us begin. Now, I do want to preface tonight's remarks a little bit more than I normally would. By the way, I do assume that everybody can hear and all systems are go. Muhammad gave me his word on that, but I just want to get a couple more confirmations. We have a large number of people in the room tonight, and so I want to make sure that we're coming through loud and clear. So just here we go. Osman, beautiful, all good, he says. Okay, Osman's a regular. His word is good too. All right. Tonight's session will, as we do every night, deal with market trading opportunities. We're here to trade. We're here to try and make money. And whatever we talk about always ends up in trading opportunities or possible trading opportunities. But tonight's session is not a pleasant topic. Let's be frank. This war is vicious. And as are all wars, by the way, there are no non-vicious wars. That's the definition of war. I also have an unusual take on it, and that's what we'll explore during the session. And I went over the session just before I went on in, and it's a little long maybe, and I'm going to try and speed it up. But the crux of it is this: my position, being slightly unconventional here, is one that I don't think Putin's a megalomaniac. I don't think he's out to recreate the Soviet Union. I think he's a sane guy with legitimate concerns. He's pursuing them in the way he sees fit. And it's not, nor should it be, surprising to anyone He warned everybody. So that being said, we'll get into the details. Let me also just say that when we get to the trading part of the show, I just want you to be aware of the fact that there's a lot of risk here. We're talking about the capital markets. We'll do our little analysis and we'll see what we think and why we think it. But we're going to get into things to trade. And no, these are not long-term investments that are generally going to pan out because markets generally go up over the long term. That's investing, and we're not talking about investing either. We're talking about speculating, short-term trading. We try to take a little money out of the market on a faster basis than the 30 years. So there's risk, and risk is simply defined as the probability of the unexpected occurring, because occur it does and will, and lose we all do. Anybody who tells you otherwise is lying to you. You cannot make money in this business without losing money. You can't participate in sports at any significant competitive level and not lose. The difference between losers and winners, however, is that losers turn losses into some sort of gain, some sort of advantage. We as traders will document our trades, try to understand why they went wrong, where they went wrong, how we can avoid making that same mistake again, and thereby benefit somewhat from the loss. Same as any other professional, be they doctor, lawyer, Indian chief, athlete, teacher. They make mistakes and don't think they don't. If they tell you they don't make mistakes, they're also full of shit. Except that they will try and learn from them. That's why a medical business is called a medical practice. They call it a practice for. I think a law office is called a law practice. They're practicing. They make mistakes, sometimes on your account. But losing is part of our business. So you've got to be trading with money you can afford to lose. All right, that's our little risk warning. Let us proceed. Any questions, ladies and gentlemen? Now, my thinking is based or relates very similarly to a guy named Mearsheimer at the University of Chicago, where I hold an advanced degree from. And this is an outline of his thought, which he's made fairly regular, or he's presented fairly regularly in Foreign Affairs, to name other major outlets. But let me just point out a few things to you. This is a picture, of course, of Mearsheimer. This is a headline from the New York Times sometime in 1963. I don't remember the exact date. U.S. imposes arms blockade on Cuba on finding offensive missile sites. Kennedy ready for Soviet showdown. Okay, get that? That's public knowledge. Here's what they were presenting. On Cuba are these missiles that could attack virtually the entire continental United States. Right? Now, I'm going to go through this quickly because it's a fair amount of text here, and I don't want to bore you. On the other hand, it's important, and I want to share it with you so you have a full understanding of what we're facing when we start talking about trading. All right? I want you to be prepared. Forearmed is forewarned. What is it called? Premonitus, premonitus. No, excuse me. Premonitus, premunitus. Forearmed, forewarned is forearmed. That's in Latin, by the way. The war in Ukraine is the most dangerous international conflict since the 1962 Cuban Missile Crisis. I said 63, that's 62. It's way too small for me to read. Understanding its root causes is essential if we are to prevent it from getting worse and instead to find a way to bring it to a close. There's no question that Vladimir Putin started the war and is responsible for how it is being waged. But why he did so is another matter. The mainstream view in the West is that he is an irrational, out of touch aggressor bent on creating a greater Russia in the mold of the former Soviet Union. Thus, he alone bears full responsibility for the Ukrainian crisis. But that story is wrong. Excuse me, please. The West, and especially the United States, is principally responsible for the crisis, which began in February of 2014. It has now turned into a war that not only threatens to destroy Ukraine, but also has the potential to escalate into a nuclear war between Russia and NATO. Anybody pay attention to Putin's speech yesterday morning? I'll spare you the details, but that last statement is a little truer today. The trouble over Ukraine started at NATO's Bucharest summit in April 2008. Okay, that's 12 years ago, when George W. Bush's administration, that's the first Bush, by the way, pushed the alliance to announce that Ukraine and Georgia will become members, meaning of NATO. Russian leaders responded immediately with outrage, characterizing this decision as an existential threat to Russia and vowing to thwart it. According to a respected Russian journalist, Mr. Putin, quote, flew into a rage and warned that, quote, if Ukraine joins NATO, it will do so without Crimea and the eastern regions. 2008. It will simply fall apart, he said. America ignored Moscow's red line, however, and pushed forward to make Ukraine a Western bulwark for on Russia's border. That strategy included two other elements: bringing Ukraine closer to the EU and making it a pro-American democracy. My mistake. This, by the way, is one of the exercises. It's called the, I forget the name, it's called Operation something or other, I forget. This is the conference in 2008, by the way, Putin and Bush, the Bucharest Conference, NATO. The next major confrontation came in, and this is the, I'm getting ahead of myself. Let me just go through this. It's a little long, but you need to understand the contents here, so I'll just plow through. The next major confrontation came in December 2021 and led directly to the current war. Did I skip a page? No, the next name the main cause was that Ukraine was becoming a de facto member of NATO. The process started in December 2017 when the Trump administration decided to sell Kiev defensive weapons, quote unquote. What counts as defensive is hardly clear cut. However, these weapons looked pretty offensive to Moscow. By the way, what was that word in the New York Times headline in 1962? Offensive weapons. And its allies in the Donbass region. Other NATO countries got in on the act, shipping weapons to Ukraine, training its armed forces, and allowing it to participate in joint air and naval exercises. That's what this is. This is the joint air and naval exercise. Operation Seabreeze, right, that's the name of it. In July 2021, Ukraine and America co-hosted a major naval exercise in the Black Sea region involving navies from 32 countries. Operation Seabreeze, that's what these little flags and tells you who sent what and did what, provoked Russia to fire at a British naval destroyer that deliberately entered what Russia considers its territorial waters. They don't do that lightly. That was taken as a major offensive, insult. The links between Ukraine and America continued. Continued growing under the Biden administration. This commitment is reflected throughout an important document called the U.S.-Ukrainian Charter on Strategic Partnership. This thing right here. That was signed in November by Blinken, America's Secretary of State, and Kuleba, the current foreign minister of Ukraine. The aim was to, quote, underscore a commitment to Ukraine's implementation of the deep and comprehensive reforms necessary for full integration into European and Euro-Atlantic institutions, meaning it has to clean up its act. It's a fairly corrupt place. The document explicitly builds on, quote, the commitments made to strengthen the Ukraine-U.S. strategic partnership by President Zelensky and Biden. It also emphasizes the two countries will be guided by the 2008 Bucharest Summit Declaration. Now, unsurprisingly, Moscow found this evolving situation intolerable and began mobilizing its army on Ukraine's borders last spring to signal its resolve to Washington. But it had no effect as the Biden administration continued to move closer to Ukraine. This led Russia to precipitate a full-blown diplomatic standoff in December. As Sergei Lavrov, Russia's foreign minister, put it, quote, we reached our boiling point, unquote. Russia demanded a written guarantee that Ukraine would never become a part of NATO and that the alliance remove the military assets it deployed in Eastern Europe since 1997. The subsequent negotiations failed, as Mr. Blinken made clear, quote, there is no change. There will be no change. A month later, Putin launched an invasion of Ukraine to eliminate the threat he saw from NATO. Now, this interpretation of events, I will tell you straight out, is at odds with the prevailing mantra in the West, which portrays NATO's expansion as irrelevant to the Ukraine crisis, blaming instead Mr. Putin's expansionist goals. According to a recent NATO document sent to Russian leaders, quote, NATO is a defensive alliance. It poses no threat to Russia, unquote. The available evidence contradicts these claims. For starters, the issue at hand is not what Western leaders say NATO's purpose or intentions are. It's how Moscow sees NATO's actions. This, by the way, ladies and gentlemen, for those of you who are unfamiliar with international relations, is called balance of power politics. And balance of power means you have to respect power that exists, and you have to work and keep it in balance. You can't deny it. Denying it has led over the centuries to endless wars in the European landmass. The upshot of my interpretation is that we are in an extremely dangerous situation, and Western policy is exacerbating these risks. For Russia's leaders, what happens in Ukraine has little to do with their imperial ambitions being thwarted. It is about dealing with what they regard as a direct threat to Russia's future. Mr. Putin may have misjudged Russia's military capabilities, the effectiveness of Ukrainian resistance, and the scope and speed of Western response. But one thing should never underestimate is how ruthless great powers can be when they believe they are in dire straits. America and its allies, however, are doubling down, hoping to inflict a humiliating defeat on Mr. Putin and to maybe even trigger his removal. They're increasing aid to Ukraine while using economic sanctions to inflict massive punishment on Russia, a step that Putin now sees, quote, as akin to a declaration of war. America and its allies may be able to prevent Russian victory in Ukraine, but the country will be gravely damaged, if not dismembered. Let me repeat that sentence. Or let me just not repeat it, but let me direct your thoughts to a place called Grozny. Grozny doesn't exist anymore. The corrupt, inept Russian Red Army was effective and is still effective. Yeah, they're inept. Yes, they're corrupt. No, the radios were stolen. Yes, that's all true, but they're effective. Moreover, there is a serious threat of escalation beyond Ukraine, not to mention the danger of nuclear war. If the West not only thwarts Moscow on Ukraine's battlefields, but also does serious lasting damage to Russia's economy, it is in effect pushing a great power to the brink. Mr. Putin might then turn to nuclear weapons. At this point, it's possible to know the terms on which the conflict will be settled. But if we do not understand its deep cause, we will be unable to end it before Ukraine is wrecked and NATO ends up in a war with Russia. Regardless of the ultimate outcome, it is entirely clear that Russia's objective is to deny NATO a whole Ukraine. In other words, should NATO deliver on its objectives of absorbing Ukraine into the alliance, it will absorb Ukraine in utter ruin. It's well on the way to doing that. So that's my little take on the background of this war. May not be yours, but it's mine. I don't speak for the firm. I don't speak for the partners. I don't speak for anything. That's my opinion. I could be wrong. But let me just say this. For those of you who have doubts about what I'm saying, I would just ask you to undertake a little bit of personal research and take a look at how Russia's done in its wars since the fall of the Berlin Wall. It's able to inflict tremendous damage on its opponents. And don't be misled by people who tell you how corrupt and venal the Russian army is. It is corrupt and venal. But focus on what they are doing. They're taking the country apart, region by region. They've got plenty of missiles left. Yeah, I know they're buying them from the North Koreans and so on. Believe me, they're far from out of ammo. All right, I've made my point. Are there any questions? All right, then. That's the background to what we're facing here. So, getting down to brass tacks, as we say, let's look at the market effects of this tragedy for the trading opportunities that have abounded in its wake. Food, fuel, chemicals, industrial production, financial assets, fertilizer, you name it. Practically all else involved in the economy of Euroland is in play. So there's plenty of trading opportunities. Now let's just talk about natural gas. I'm going to run through this quickly. This is probably more familiar data to most of you than the previous. Methane underpins a vast quantity of economic activity worldwide as a source of energy to turn electricity turbines. Euroland uses natural gas to generate about 25% of its electricity. But this fact is more significant. As a source for its chemical business, natural gas plays an enormous role as a feedstock for the vast array of chemicals derived from the ubiquitous hydrocarbon. Between the electricity and industrial uses of natural gas in Euroland and the dangerous reliance on the hydrocarbons supplied by Russia lies an enormous energy crisis in the making. We talked about this. Those of you who follow our signals, our clients, our clients of the house, I know that there are many of you tuning in tonight that are considering opening an account with us, or maybe just tune in because you enjoy the product. But if you are considering opening an account with us, keep in mind this is the kind of product we turn out for our clients on a nearly daily basis. As winter 2022 approaches, the crisis is going to be thrown further into relief. We're still in September, for goodness sake, and it's going to get bad. And I think I'll just. By the way, this is being recorded. Yes, Barbara, it is being recorded, and you'll be able to follow up and read this text. I'm going to skip through this a little bit because I want to show you some charts soon. But just let me. Well, maybe no. I see. But Bruce makes a good point. Okay, I will read it. I have prepared it, and I will read it, and that's why you're here, not to look at it later. But yes, Barbara, it is being recorded, and you'll all get a link to it in an hour or two after the session ends. As winter 2020 approaches, the crisis is going to get thrown further into relief. Specifically, Russia, as the principal supplier of the energy source to Europe, continues a strategy of reversing the flows of its hydrocarbon output from the west to the east, in other words, from Europe to China and India, which they're selling in huge quantities, although significantly at discounted price. The gap between the demand for and supply of the missing Russian product is going to produce some truly frightening scenes of economic damage and, unfortunately, death by exposure to freezing temperatures for thousands of vulnerable Euroland residents. And that ain't the worst of it, by the way. The alternative supply sources do not, in the near term, offer any encouragement. The existing pipeline networks, nearly in their entirety, run from the east of the Eurasian landmass to the west, to its western termini. There are no pipes running from the rich eastern Mediterranean, Egyptian, Israeli, or Cypriot gas fields into southern Euroland yet. Importing liquefied natural gas from the Middle East or the U.S. is remarkably difficult because of the lack of gasification facilities required to transform the compressed methane in liquid form transported in LNG tankers to be piped to storage facilities into the distribution network. The over-reliance on Russian supply simply obviated the need to build alternative supply methods. Currently, the only two liquid natural gas terminals in Europe are in Spain and Portugal, permanent ones. The Germans have since established a couple of floating ones, and they're building one in Hamburg. But the floating ones are small in capacity relative to a big land-based one. Yet they are not connected, the ones in Spain and Portugal, the current ones, they're not connected to any of the existing pipelines in Euroland. Unbelievable as this is, it is true. The Germans are building a new, the LNG plant in Hamburg, but it will take over a year and a half to become operational. That's one winter at least. German firms have also contracted the leasing of floating offshore rigs for long-term use. They, too, however, are not immediately available for use and at best have only limited capacity compared to the full-fledged onshore operations. This is the gas contract, okay? Here's February 23rd. You get the idea. Where this is a daily contract. It's dated a little bit. It's since come down a tad, but it's on. I'll show you a live chart later on. But you get the idea. Okay, the war made this huge spike. The markets freaked out. They didn't want to deal with it, and now they're dealing with it. Okay, so that's where we are on natural gas. There really isn't much more needed to be said, and that's the Dutch contract. All right, dollar index. Now, we need to understand the strength of the U.S. dollar for a number of reasons. Well, I'll just plow through this and come what may. The long-term chart below shows the U.S. dollar index shows that the greenback is at a 20-year high. All right, it has not been this high since 2022. It's 2002, so it's 20-year high, and it's going up. Again, this is an old chart. I'll show you a new chart. It's now higher. It might reach its, well, it's gonna surpass this. There are a number of reasons for this. This means that the U.S. dollar buys more than it has, at least of the trade-weighted basket of the 6 currencies in the basket that comprise this index, than it has in the last 2 decades. There are several reasons for this unusual strength, and they will all have serious implications for not only the complex of foreign currency pairs worldwide, but also the worldwide economy writ large as well. Now, I don't really want to get into this so much, so I'm going to just say a few basic things about this. Yesterday, I'm sure you're all aware, Chair Powell raised the U.S. interest rate. And by the way, let me just digress a moment and say the U.S. interest rate is not 3.25%. That's nonsense. That's what the banks pay the Federal Reserve for their money. They don't loan it out at 3.5%. That's what they pay for it. They loan it out at 4, 4.5, 5%, and that's going to go up too. But everybody focuses on that Fed funds rate. Nobody borrows except the banking system at the Fed funds rate. You and I pay more. But that's just a simple fact that we need to be aware of. As inflation rises, and it's rising, it's now 9% in the United States. Interest rates are only 3.25%. They're going to have to rise a lot more before inflation comes down to the 2% target. It's just not going to fall down to 2% if the interest rate is 3% and inflation is running at 9%. People are going to say, "Oh, the interest rate is 3.5%. I better stop raising my prices." Where's the wrong answer buzzer? No, that's not how inflation works. And I'm not here to go into great length about the perniciousness of inflation, or what causes it, or how it's arrested. Just suffice to say that we're going to see expensive U.S. dollar money, because interest rate is the cost of money. Okay, it's called interest rate, but that's just a technical term. What it means is the cost of money. We know what the cost of a Toyota Corolla is. We know what the cost of a pair of jeans is, and we know what the cost of a U.S. dollar is. Okay, it's just the cost of money, cost of capital. So as Europe goes into this massive energy crisis that it's going to face this winter, and I said I was going to mention this when I talked about gas and didn't, but we'll mention it now. It's not only the price that's going to get really ugly in the frozen citizens. I predict, and I pray to God that I'm wrong about this, but I predict that hoarding is going to start manifesting its ugly head. They're not going to share the gas. They're going to hoard the gas. Macron went to Tunisia to cut a deal. Mr. Schultz went to, where did he go? I think he went to Libya. Can't remember where. They're all trying to cut deals to get their people some gas. Companies are going bankrupt wholesale. Germany nationalized, let me repeat that word, nationalized. They bought Uniper, its largest natural gas distributor rather. You get the idea, it's still September. It's not even the winter yet. It's going to get worse, much worse. So as the economy starts to grind to a halt, and one of the great trades is the declining, and we'll take a look at this in a moment, is the declining stock values and market valuations across Europe, the US dollar is going to become stronger still. Let's just leave it at that. You see that? I mean, I don't really need to say more than that chart says. And France gets lots of gas from Algeria, I think. That's true, Catherine, but France gets 80% of its power from nuclear generation. They're way ahead of the curve, way ahead of the curve, decades ahead of the rest of the world. And in my opinion, more than decades ahead, because the rest of the world is sinking billions and zillions and trillions into this idiotic solar and wind concept, which is retarded simply because of the fact that it's so unreliable. We have no way to store the energy that's generated. It's just pished away, and because there is no battery technology to speak of. And the carbon footprint of setting up a wind farm or a solar electric generating field is so grotesque that it would be just better if we used the energy used to produce those photoelectric cells, or to make the concrete and the steel used in the footing for those giant wind turbines, and burned it to make it power instead of making those silly plants. It's just mind-boggling to think that. Here, I'll give you an example. You take an ordinary apartment. My apartment is, I don't know what it is, 80, 90 meters, whatever it is. You carpet it in solar electric power cells, and the sun is bright and shining. You know how much that would power in real time? That could power my toaster. Toaster is what, 2,400 watts or something, 2,500 watts? I could get 2,500 watts out of 90 square meters of solar. If you ever went to the roof of my building, which is a modest office building, 19 stories high, it's not particularly big. There's one next door that's, I don't know, 40 stories high. It's covered, the roof is covered with a giant air conditioning system to keep the building cool in the summer, heat hot in the winter. If you think you're going to power that setup with a solar electric generating field, you're going to have to cover half the city, more than half the city, just to power my building, a modest building. So it's absurd. France stopped 5 reactors for maintenance and price went off the roof. That's also true, Usman. But that's standard maintenance. They take good care of their equipment. It's in fine shape. Some of those plants have a service life of 50 years, and they're extending them. So don't worry, they'll be back online. I'm not usually in favor of French policy on anything. I think it's a poorly run country that has its head where it ought not to be. But on power and energy, they are leading the world. And I don't say that lightly. So that's the dollar index, the DAX. Now here we're going to get into probably the most vulnerable of all of the European stock exchanges, which are all vulnerable. Also known as the Deutsche Aktien Index, or the German 40, is a stock index that represents 40 of the largest and most liquid German companies that trade on the Frankfurt exchange. The prices used to calculate the DAX index come through on Exedra, an electronic trading system. As the premier trading vehicle representing the German economy, the DAX is and will continue to be the showcase for the vicissitudes of German industrial malaise in the face of the coming Euroland energy crisis. German government policy, both foreign and economic, has long been focused on integrating Russia into the European orbit for free trade and rules-based international relations. Now, of itself, this is a worthy policy goal and orientation. On the other hand, U.S. advice to the German ally, particularly Mrs. Merkel, ran slightly counter in that the U.S. maintained that the Germans should not hedge, that the Germans should hedge their bets and cultivate alternative sources to Russian-supplied hydrocarbons, as well as upping their defense expenditure for preparation in the event of a Russian military aggression that had not become as distant form from U.S. consciousness as it had from the European consciousness. Now, you know, I'm not a great fan of American foreign policy. It's often venal and unreliable. They've sold out practically everybody they've backed since the Second World War. The Vietnamese, the Syrians, the Afghanis, the you name it, the Kurds. They've screwed people all over the world. And my suspicion is that ultimately they'll get tired of supporting the Ukrainians and screw them too. But when it comes to advising the Germans to cultivate it, to stop relying on the unreliable Russians for their energy supply, they were right. Fast forwarding to the outbreak of the Russo-NATO war beginning the night of February 23rd, the decline in German economic fortunes has been stark. Catherine remarks that one of the plants, Flaminville, has taken 20 years to get up. Yeah, these plants are complicated. Getting back to the nuclear thing, they're complicated. I know you can put up a solar electric generating field in 2 years. You can put up one of those wind farms after approval is gained. That's what takes the time, by the way. You can put them up in no time. But they have a service life of 10 years. They fall apart in no time. They fall into ruins. The amount of energy it takes just to make the photoelectric cells. You have to burn a specific kind of coal at an extraordinarily high temperature to melt a very specific kind of silicon, not the silicon you find on the beach, but a very specific kind of skill to form those photovoltaic cells. The carbon footprint for each one is enormous. And I won't even talk about the amount of energy it takes to make the steel and cook the limestone to make the concrete for the footings of those giant wind turbines, which have a service life of no more than 10 years. They fall apart and turn into dust. They wear out in no time. They service life of 10 years. A nuclear power plant is a service life of between 40 and 60 years. Okay, it takes 20 years to build, but I rest my case. It bears repeating that DAX has fallen 23.78% since the outbreak of the war. The war, it's only been going on now for 8 months. Given our assumptions concerning the duration of the war, that it will last into years, the precedent for further DAX declines is beyond strong. We are of the feeling that it will be no less than devastating. German industrial economics has long been based on the availability and reliably supplied cheap natural gas. The world's biggest chemical concern, Badische Anilin- und Sodafabrik, better known as BASF, headquartered in Ludwigshafen, has seen a fall in its stock price of over 37%. This is the largest chemical manufacturer on Earth, by the way, since the outbreak of the war. It has fallen by nearly 40%. That slide is not likely to cease anytime soon. By the way, it's been a tremendous shorting opportunity. Those of you who have been listening and following our advice have noticed that and have exploited it accordingly. That slide is not likely to cease anytime soon. Electricity in Germany is also going to cost it's already costing 5 times more than it did last winter to produce as nations suffer from its premature retreat from what was once a strong nuclear industry. By the way, they closed their nuclear industry because they were freaked out after Fukushima in 2010. It's going to cost them significantly more to produce as the nation suffers from its premature return. And retards its stated green goals. Yes, they've given up their green goals. They started burning coal again to make juice. We view the effects of the war on the German economy as long-lasting and deep. Okay, here's the DAX since here's the pandemic, the recovery, and the decline. This is a weekly chart. So here's the decline since the war right here. The DAX, the mighty DAX. Now we're going to end with this. This will be the last slide. Then we'll go to the charts, the actual chart. This is the most depressing of all. But as opportunities go, it's probably the best yet explained. Lockheed Martin. And by the way, what I say for Lockheed Martin holds true for Thales, holds true for Rheinmetall, holds true for British Aerospace. Lockheed Martin Corporation, well, not this part. Lockheed Martin is specifically American. It's the only one of the 4 I just mentioned that is American. BAE is British, obviously, Rheinmetall German, and Thales is French. But Lockheed Martin Corporation is Uncle Sam's, aka the U.S. government's largest supplier, period. And its largest contractor, period. Uncle Sam buys more from this outfit than any other corporation on Earth. The firm is responsible for a cornucopia of products designed for current and future use in defending the military and technological supremacy of the United States of America. We have been bullish on this stock for decades, as have investors and speculators worldwide, and for good reason. So many of America's premier weapons systems and weapons platforms are the products of this firm. From warplanes to giant marine vessels, military missile systems, enormous array of highly advanced subsystems, the huge, over 33% rise in this stock since the outbreak of the first open warfare between nations as opposed to civil strife. And I say that to differentiate the NATO-Ukraine war from the Yugoslavian war. That was a civil war fought among citizens of the same country. In well over half a century on the European landmass since the cessation of hostilities since the Second World War in 1945 has, hardly surprisingly, brought tremendous windfalls to this armaments giant. The transfer of weapons, ammunition, intelligence, all the essentials of warfare from NATO to the Ukrainian army have been withdrawals from frontline NATO armories. These munition stockpiles will need replenishment. Furthermore, Walmart and Costco can't replenish them, nor will the replacement armaments be the same as the recently dispersed ones. Rather, only firms like Lockheed Martin, and for that matter, here it mentioned Rheinmetall of Germany, Thales of France, or BAE of the UK are positioned to provide the new equipment, as it will be a significant upgrade and therefore more expensive than the dispersed material. This is so because military material has especially long shelf life. Stored correctly, explosive munitions are effective for decades. Systems like artillery pieces, mechanized equipment, even airframes, properly stored, can be unwrapped and used decades after their initial storage or production. So that ends the official, the formal part of our presentation. We're going to go to the charts in a moment and take some questions. Let me just mention my sources. Bloomberg News, Bloomberg Television, TheEconomist.com, the best news source on earth, the New York Times, the Wall Street Journal. And here's a book I just finished recently. I highly recommend it to you. It's called The World by Richard Haas, published in 2020. If you want to get up to speed on how the world works and what's taking place and why it takes place, read this book. It's a quick read. It's an amazing education in a very short period of time. Lockheed Martin. A 33% rise since the outbreak of the war. Okay, are you following this? Are you seeing what's going on here, ladies and gentlemen? Is this a hard proposition to wrap your heads around? Thank you. All right, let's go to the live. Let's go to some live screens. One moment here. Okay. Now, I just want to point this out to you. This is a chart that I made for this morning's briefing, but I want to share it with you now because we did talk about the U.S. dollar. The red line is U.S. inflation rate. The blue line is the current federal funds rate. All right. And you'll notice inflation here is, what is it? I don't know, 11, 10, 9, excuse me, 9, 8%. This is the inflation. This is the interest. This is the inflation rate. This is the interest rate. So the interest rate, the inflation rate is, I don't know, 11%, 10%. The federal funds rate is 3.25% right here. So the last time it spiked to anything like that, the inflation rate had to rise to meet it, to bring it down. 87. The great financial crisis of 2007. You get the idea. All right now. Here, when it spiked because of fear of economic ruin, they lowered the interest rates to 0. And it's been free money pretty much since then. Well, no more free money. So that's why the US dollar is going to continue strong. Let's take a look at some of the assets we did talk about. We talked about natural gas. Let's take a look at natural gas. Now, this is US natural gas. And I want to point out very clearly that 2-month, what do we want, a 2-month chart? We want a daily chart. Now, I want to point out the fact, let's get rid of this. I don't need this anymore. Remove indicator. No, I just want to remove this indicator. Remove all of them. US Bureau of Labor Statistics. We'll just hide it instead of removing it. This is natural US natural gas. It ain't the same as, this is current natural gas futures, right? This is the US contract. It's falling. It's not directly related to this natural gas, which again, on a daily chart is falling, but it's going to come back, I assure you. This is because the gas price and the oil price has fallen in the last couple of weeks. It's all right. The natural gas is, oil is rising again, and natural gas will be rising as well. So it's a good time to buy in on this dip. Natural gas is not going to get any cheaper. It's going to get much more expensive. In our opinion, we could be wrong. Okay, that's the risk. Don't let us lead you to believe, nor anybody lead you to believe, that we have the truth in our hands. We're speculating. We're speculating and we're taking risks based on our speculation, and therefore could be wrong. And so you have a risk of losing your money if you follow this thinking. But that's our thinking, and that's what we do. That's how we think. That's what we trade. Are we right all the time? No. Do we lose money? You bet. But as the sine qua non of our business is, we make more money than we lose, and that, after all, is how we define success in this business. It's an odd bar, a low bar, one might say, but that's the bar. If a teacher had that bar, or a dentist had that bar, or a student had that bar, they'd be utter failures. But we are none of those things. We're traders, and we take risks. And those other endeavors that I just mentioned, they don't take risks so much. So actually, I do want to get rid of this because it messes up the rest of the chart. So I'm going to get rid of it entirely and go back to our fixed. So that's natural gas. It's down now because this is where I made the chart, the end of August. It's down now, and so this is probably a good time to buy. Yes, that's what we think about natural gas. Let's take a look at the U.S. dollar index. Questions, ladies and gentlemen. U.S. dollar index name is the DXY, the Dixie. Here's the dollar index, okay? Well, let me get the va-va-va-boom sound effect. You love this, one of my favorites. This is the sound of prices going through the roof. Yeah, that's the US dollar index, okay? It is going through the roof. And it's likely to continue. By the way, I point out that it's going up on increasing volume, positive force index. There's not much more to be said. This is a terrific trade, ladies and gentlemen. It's just a fine opportunity. Yeah, you know, it could reverse. I could be wrong, but doesn't look that way. Okay, even if you project this or take a much longer view and go to a weekly chart, it's the same picture. It's even steeper. All right, it's even steeper. So there you go. I just can't state the obvious any more clearly than I already have. And let me just see. Speaking about charts, I wonder what happened to the moving averages. Were they removed? No, here they are. There we go. The 20-day, the 50-day, and the 200-day moving average. All right, and this is just an average of the volume. And this, by the way, of course, this is volume. These lines here are volume on time. This is volume on price. So it takes, instead of showing you how much volume took place in each time interview, this tells me how much volume took place at each price. All right, for the given data set. So the dollar index, another terrific opportunity. How deep can British pound go down? Oh, we'll get to that in a moment, Mohammed. An excellent question. Let's take a look at the DAX. What is the DAX? Is the FDXN, I believe. That's it. Here it is, the DAX future. Look at that. This is pathetic. This, by the way, of course, is the outbreak of the war. All right, ladies and gentlemen. Again, I don't want to celebrate. I don't want to sound triumphant here. This is a war, goddammit, and people are dying by the thousands. This is no joke. This is no laughing matter. We're traders, and our job is to take money out of the markets when we can. If, by the way, you feel that this goes against your moral grain, or you have moral qualms about this, don't trade. But this is the reality we're facing, and it's a rare reality. And our job as traders is to make money take money out of the markets when we can. And well, you think you could take money out of this reality? That's the DAX. Think it's going to reverse anytime soon? Yeah, I'll give you, just since I'm speaking thusly, let me give you a longer term perspective. All right, let's get rid of these arrows. We don't need them. That's signaling what I thought was going to happen back then. Those are old. And let's compress the data just a little more, give you more of a hindsight. This chart only goes back to 2016. That's unfortunate. Well, not that much data. Here's the pandemic, the recovery. We're below pre-pandemic levels, and well, you know what I think in terms of where it's going to settle further. All right. The force index is well into negative territory. Not well, it's significantly into negative territory. And the volume on this decline is certainly high, not falling. It's more or less average, but it's not falling on low volume. It's falling on average volume, and that's a sign that there's a lot of sentiment behind it, and therefore likely to continue. That's the DAX. Let's take a look at Lockheed. Well, Lockheed Martin won't have changed significantly either at this point. LHM, I believe. LMT, I'm sorry. LMT, there we go. Again, Lockheed Martin has taken a breather since I showed you that last chart. Let's go to the daily chart. It's taken a bit of a breather, but it's going to come back. That's our opinion. It's fallen significantly lower volume. The way is the outbreak of the war. We'll call it right here. Is the outbreak of the war. February 23rd, exactly right. The day the war breaks out, Lockheed Martin takes an enormous leap It's since fallen back, but as this war drags on, we are of the opinion that it's going to recover this high and significantly beat that out. All right, ladies. Oh, and Muhammad asked about how deep British dollar pound can go. Let's take a look at a pound dollar. GBP USD. All right, that again, pretty damn depressing on enormous volume. Now, keep in mind, and to answer Muhammad's question, we're going to have to take a much broader viewpoint. So let's get a weekly chart of pound dollar. Yeah, you can see it really throws things out of whack, but good. Well, here's this here. Where's the decline? Here's the beginning of the war right here. It's just lost so much. It's even hard to say how far it can go. Here's from the Brexit war. I'll even magnify this this long-term view. Put it into focus again. I have a good-sized data set here. Not 96. This is about it. This is as far as it goes. 25 years, I guess. Yeah, about 25 years. It's been falling stiffly, but it hasn't been this low since I don't know when. I don't have it in this data set. I doubt that I have it on the MT4, but we'll check that to be thorough. Pound dollar is in, I think, FXB. I have them broken down to make it somewhat easier to locate them. His pound dollar. I don't think the data set is this big on yeah, it also goes to 96. That's it. Yeah, 96. That's as far as I have available. So it's just 2006, 2016, 21. It's 25, 26 years of data. It's a 26-year low, Muhammad. Now, how low can it go? You ask. I'm not that good, sir. I'm not that smart. I'm not that talented. I can't tell you. I don't know. I can only tell you the direction. Okay. And its likelihood of continuing. How far it'll continue, I honestly can't say. I'll tell you this, though. Britain is in very deep shit. Very, very deep trouble. And it's not likely to recover anytime soon. I believe Mrs. Truss won't last 6 months. Their economic policy is significantly worse than their fellow Europeans, despite the fact that they're not involved in the war, because they are suffering from Brexit. They cut off their relations with their largest trading partner. Think that was a good idea? I don't. Might be in a 10-year, 15-year time horizon, they'll evolve to be as strong and independent and as powerful as the Canadians or the South Africans or the Australians, all of whom I might add are blessed with enormous resources, or the Indians for that matter, the New Zealanders. There's lots of Commonwealth countries, after which they could possibly emulate, but not in the near term. And the near term is like 10 years. They're not going to be there in 10. They're going to continue sliding, in my opinion, Muhammad. How far, I can't tell you. Luque asks, what about Bitcoin? My pleasure, Muhammad. Thank you for the question. What about Bitcoin? Well, Bitcoin is actually doing fairly well. Remarkably so. Bitcoin dollar. It's off. It's still trading at 20,000. We need we don't need such a big chart. There's no data on this. Yeah, it's all the data you really need. It doesn't get serious until like 2016, 2017. But yeah, there's tremendous volatility here. Tremendous volatility. Will it come back? The key is, you'll notice since the war, it has lost. Let's take a look at exactly how much Bitcoin has fallen off. It's lost 56%. Now, the problem with that statistic is it can lose 56% in a week anyway. Even before the war, it had this kind of volatility, the same volatility, and before the war. So that kind of up and down is no big, on small volume, I might add. So that lower volume indicates a lower sentiment. So it could reverse much more easily than when it was rising on high volume here. But I'm a believer in Bitcoin for lots of reasons. I'm a believer in blockchain. Let me adjust that statement. I'm not a particular believer in Bitcoin, by the way, though I do own some in the interest of full disclosure. But my principal holding in crypto is in Ether. And let me say, it's a very small percentage of my portfolio, all right? I believe we should all have some because I'm a believer in the technology. How much? A fairly small portion. Put it away for your kids and don't trade it. It's untradeable unless you've got a stomach that's lined with lead, which mine isn't. I have an appetite for risk. I avoid it, though. I try to minimize my risk. I do have an appetite for it, but I try to minimize it. Trading cryptos is for people who have a stomach for way more risk than I do. Are there charts to view currencies such as pound, Swiss, Aussie, yen on their own to measure their performance in terms of price? There is no such thing, Aisha. There is no such thing as on their own. There is no asset that's valued absolutely. You look at gold. Gold is versus the dollar. 1 troy ounce of gold equals how many US dollars? There is a gold euro quote as well. Oil exists, is traded against dollars. Palm oil is traded against Indonesian ringgit. There is no such thing as an absolute. Nothing has an absolute value. 1 yen will buy whatever it buys, but you've got to value it against what it buys. 1 yen will buy you a candy bar, maybe. I don't know what's yen. 10 cents. What am I talking about? A candy bar? Oh my God, a piece of gum. It won't buy you anything. But it's only there's no such thing as a standalone value, Aisha. I hope I've made that clear. And Catherine asks, despite the merge, because of the merge, Catherine, I believe the Ether merge will have a very positive long-term effect. It was a good move. My pleasure, Aisha. Wow, we're really, really running. It's almost an hour, ladies and gentlemen. I apologize for just droning on here. This is above my usual time sequence. Are there any more questions, ladies and gentlemen? Feel free. I mean, I'll go on as long as you want. I have no problems with going on, but I realize that it's a lot for a lot of people. So if there are no more questions, let me just then, I'll wait till they come in. But in the meantime, let me just say a couple of things. First of all, for our clients who are regulars, and there are many of you here tonight, and I'm always, humbled and very gratified to see you return to the room and participate and really add to the quality of the presentation. We, as the management here at Alvexo, are always really, truly grateful and humble to you for your patronage of us as your online broker. And I know there are also people in the room tonight. My pleasure, Catherine. Thank you for the kind words. I also address my remark to people who are here not as clients, but by way of another invitation, investing.com or however you came by us. If you're considering opening an online trading account with a broker, consider opening up one with Alvexo. We do our best for our people. We're stand-up, honest, straight-shooting brokers. We're not right all the time. We lose money and we're wrong because there's risk, and we don't pretend there is no risk, and we don't tell you stories and fantasies and nonsense like they do on the internet. This is a game for people who are interested in excitement and fun, for sure, but there's risk, okay? There's risk to your capital, and making money is not any by far not a foregone conclusion. But this is a representation of the quality work we turn out for our people, and we do our best for our clients. So please consider opening an account with us. Let me just say there is a poll on your control panel. I'd like you to fill that out. I'd like you to answer a few questions at the end. Just take the poll and the questions together. Won't take you a minute. It just helps us. It guides us. We pay attention to what you have to say, and it helps us in tailoring the future sessions to you. And let me just finally say our next session is the same time next week. On the 29th, we're putting on a session called Chinese Communist Party Economics, or the Chinese economy And again, if you're looking for encouragement, if you're looking about, for happy days, here again, don't tune in. Okay, it's a story of woe. But again, as traders, our job is to take money out of the markets, and the Chinese Communist Party is giving us loads of opportunities to do so. President Xi, he's not a policy genius, and so he's just, well, tune in next week and find out what I'm talking about. All right then, ladies. Sibusiso, good to see you. Thank you for your kind words as well. Great, Lucy. See you next week as well. And I thank you all for the kind words. It warms my heart. And tune in next week. And we'll see you all soon. So, ladies and gentlemen, on behalf of the staff and the management here at Alvexo, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. Oh, here it is. Yes, good night, Captain. Thank you, too. Thank you very much for your participation. I appreciate it. Good questions. It's fun to have you in the room.